Hello, and welcome to Portfolio Matters. A couple of weeks ago, in our weekly update, we covered new build homes and whether they're a good investment. Now, I've done some more digging, and we are going to expand and partially correct our segment on the weekly. I won't do the full disclaimer as I'm not talking about investments, but as always, please do your own research and a full disclaimer can be found at the end. Okay, new build homes. Well, the banks are increasingly reluctant to lend to new build homes. This chart shows mortgages that are above 85% loan to value. And they show that actually the banks have started stepping back for existing homes. So the proportion of loans that are above 85% has fallen quite dramatically in the last couple of years. But in new builds, it's even more dramatic. And now less than 5% of bank loans are more than 85% loan to value. So the banks don't want to take on the risk of lending to new build homes. So the question is, are their concerns justified, and are new build homes a good investment? Now, new build homes tend to trade at a premium to comparable homes on the market. And this premium is A, quite hard to measure, but B, partly justifiable in that new build homes don't require refurbishment and you should be able to move in straight away and use it. Whereas if you buy an old house, you generally need to modernize it before you can move in. So that cost of refurbishment should be reflected in higher prices for new build homes. And you can see here that the ONS estimates that new build homes trade at a premium of above 20% to existing homes, whereas other organizations calculate the new build premium to be lower, but still substantial. Now, when we were talking in the weekly about this issue, we misinterpreted this chart. So this chart shows the performance of new build homes relative to the market over time using transactions in the secondary market. So onward sales of new build homes. And what this shows is that in the early years, new build homes actually appreciate faster than the rest of the market. So if you resell a new build home in the first couple of years, you actually outperform the market. But then over time, new build homes tend to underperform the market very substantially. So in the first couple of years, new build homes tend to command a premium of up to 20%. Compared to comparable old homes, but over time that decays to a discount of between 10 and 20%. So what this chart is showing is if you buy a new build house, you need to try and flip it. You need to sell it quickly and not hold on to it, because as you hold on to it, its price will tend to underperform the market over time. And the longer you hold on to it, the greater the underperformance relative to the market. And that trend is even more pronounced for flats. And the underperformance of new build flats is really quite marked. Over the course of 20 years, new build flats fell to a discount of 40% relative to comparable flats on the market. Now, why should that be? Well, one of the reasons is that developers are making smaller and smaller houses and flats for the new build sector. So this is the average house size between 1930 and 2018. And you can see house sizes peaked in the 70s, and since then they have fallen by 20%. And we are now back to the size of houses we were building in the 1930s. One of the reasons that houses have shrunk is that the living room has shrunk. So this is the average size of the various rooms in the house, and you can see that bathrooms have roughly remained the same. The size of the second bedroom has actually declined slightly over time. Size of the kitchen has declined since the 70s. Master bedroom, again, is generally downward slope since the 30s. But the big change is in the living room, which is now back to the size it was in 1930 and has shrunk 30% since 1970. And in addition, not only are the rooms shrinking in size, but there are fewer of them. So the average number of bedrooms is now below 3. And actually, that's the lowest it's been. And developers have now started selling micro homes. So this flat is 27 meters squared. And it's on the market for 450 grand. And what about this one? This is in Chelsea, 16 meters squared, 350 grand. You can see that is the kitchen there. That's the bed. Where do you eat would be the question. Now, the Help to Buy scheme has really helped to prop up this market. So this is the percentage of deposit provided by the Help to Buy scheme. So you can see that for first-time buyers, Help to Buy provides up to 5% of the deposit almost 60% of the time, and 15% around 10% of the time. So it is providing extra security for the bank. Remember, the Help to Buy scheme provides interest-free loans up to 400 grand in London and up to 200 grand outside London for 5 years to first-time buyers. By providing banks with extra security with which to lend to first-time buyers, the Help to Buy scheme is providing crucial financing for the housing market. And what this chart shows is the estimated number of housing completions with and without Help to Buy. And you see Help to Buy has helped to increase the number of new homes being built. So the market is increasingly reliant on financing from Help to Buy. The other reason that banks may be reluctant to lend to new build homes is because property developers have various little dodgy schemes that they try and impose on new buyers. Now, one of the big ones, which we are currently attempting to deal with, is the ground rent scandal. So this is a real story taken from The Guardian. And in 2010, a couple paid £101,000 for a Taylor Wimpey home. And hidden in the leasehold contract was an escalating ground rent. Now, the ground rent started off at £250 per annum, but would double every 10 years. And you can see the effect of that doubling here. So after 10 years, the ground rent increases to £500 per annum, 20, 1,000, and then after 90 years, it's £128,000 per annum, and the flat has a 125-year lease. So after 90 years, you are paying more than the price of the flat every year in ground rent. And knowing that in subsequent years, the ground rent would become unaffordable, banks are refusing to provide financing to potential buyers. So that means the couple who bought the flat in 2010 are unable to sell it. Essentially, its value is zero, and they have this huge ground rent liability. Now, a reform bill is going through Parliament now, and it aims to outlaw exploitative ground rent contracts in the future, but it will not amend existing contracts. And it is little scams like this that are making banks very wary of lending to new build properties. In addition, there's the service charge scandal. So if you own a new build in a block of flats, you have to sign up to service charges. Generally, there's a company that is contracted to provide maintenance and all the other services that blocks of flats require, like concierge, etc., maintenance of the lifts. And that contract can be opaque and exploitative. So this was from an article in the FT, and it talks about service charges in Embassy Gardens, Battersea, which rose by 58% between 2015 and March 2021 to £6,500 per annum. And these are really big numbers. Service charge in New Providence Wharf, Southwark, rose by 77% to £9,000 a year in the 4 years to March 2021. And when it comes to selling on one of these flats, those enormous service charges really will hit the resale value, because who will want to take on a service charge of £9,000 a year out of post-tax income? Returning to the Help to Buy scheme, we covered this in one of the weeklies, but some academics did some research on the impact of Help to Buy, and they showed that in London, the Help to Buy scheme had inflated house prices but had no effect on construction volumes. Essentially, Help to Buy has increased demand but had no effect on supply, because supply is constrained by the planning regime, which has not been changed in any way. So the effect of increased demand and static supply is increased prices. And what they did was they looked at the price of houses just inside the boundary of the Greater London Authority and those just outside it. Now, houses within the boundary are eligible for the £400,000 Help to Buy scheme. Outside it, it falls to 200. And what they show is that houses just inside the boundary have increased by around 20% compared to houses just outside it. That is entirely attributable to the Help to Buy scheme. And if you look at houses on the England-Wales border, you see a smaller but similar effect. Now, Wales has its own Help to Buy scheme, but it's smaller and it's applied to a more restricted number of property types. And there you see that houses in England have appreciated by about 10% relative to comparable houses just over the border in Wales. The Help to Buy scheme has had the effect of pushing up houses, which has been very good for property developers. And this chart shows the profits of property developers that target the Help to Buy scheme, that's in red, relative to other property developers. And you can see that property developers who target homes eligible for the Help to Buy scheme have seen their profits treble. And there's also an upper limit on the Help to Buy scheme of 600 grand. So what property developers have done is build a load of flats and houses at 600 grand. On the left, you see a histogram of the house prices in England pre-Help to Buy. On the right, post-Help to Buy, and you see there's an enormous spike exactly at 600 grand as property developers try to squeeze everything they can out of the government scheme. So in summary, the main beneficiary of Help to Buy has been property developers. Okay, so in summary, are new build homes a good investment? Well, we've seen from the empirical data from resales that in the first couple of years, yes, they are. If you can flip them successfully in the first couple of years, and bear in mind, those charts don't include stamp duty, which you have to pay. But if you can flip it in the first couple of years, this could pay off. But the longer you hold it, the more they become a liability rather than an asset. So over time, new build homes tend to underperform the market and you will have exposure to whatever little dodgy schemes the property developer has attempted to foist on you via the leasehold arrangement. So that's ground rent or service charges. Also, if you buy new build, you are assuming that the government Help to Buy scheme will continue to keep house prices inflated, because you've seen that the Help to Buy scheme has been responsible for a 10% rise in property prices in England and a further 20% roughly rise in property prices in London. Were the Help to Buy scheme to disappear overnight, you would expect those premiums to disappear as well, which case your new build home could fall by up to 30% overnight. So, in summary, new build homes, high risk. Okay, that's it. Thank you for watching. Please, can you press like and subscribe to the channel? And in the meantime, it's goodbye from me, Keith Jordan. Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.